Alrighty, what's up out there? What's cracking in the trading world? We're gonna do a quick video. This video, we're not gonna focus on wins and losses. We're not gonna focus on strategy. Our main focus in this video is to point out the approach to the market. Okay, and we want you to be the judge. We definitely feel at Seven Kings Trading that we have the best approach. We're not the only ones with this approach. We learned it from others, but it's a very, very small percentage of traders that takes this approach, which we believe to be the proper and correct approach, which is what we call forecasting price. Okay, and the only way that you can do that is if you learn how to speak the language of the market, simply put. However, that's not what most people do when they approach the markets. What you see on the screen is what you're going to see on the majority of traders' charts. And if it's not that, then you're going to see trend lines and support and resistance lines in combinations to make up different patterns and whatnot. And we'll go over some of that as well real quick. But again, what's the approach here? And so let's zoom in real quick. And we're just going to talk about the concept of what we're doing here. Okay. If you've been doing this for, at least a month, I'm pretty sure you're familiar with what you're seeing on the chart, some of it at least. The most popular indicator in the trading world is your moving averages. Okay. We have three of them here, your 50, your 100, and your 200. The 50 and the 200 are probably the two most popular that you'll see out there. Okay. Then down here, what we have is an RSI, and then we have a stochastics. Okay. Now, what is the approach here? And why do so many people get into trading and not end up successful? Okay. Well, what we're looking to do here, what we're taught by all of these trading gurus, quote unquote, all the YouTube channels out there, not all, again, a high majority of them, what you see is them basically teaching you something that you can learn on your own. What do I mean by that? Well, the concept of trading with indicators is basically looking at the indicator and waiting for some type of reactionary scenario. Okay. When you're talking about your moving averages, you're either talking about price crossing over or crossing below the moving average. And then that's when you're supposed to react and get into a trade. Or they may take it to the next level to be more cautious, to confirm a move, quote unquote. And you might be waiting for one moving average to cross over another moving average. Okay. The concept that we're talking about is just reacting to something that happened in the past. Okay. It's a reaction. You have no idea where this is going to take place. So you just have to wait for it to happen. You don't necessarily have to stare down the charts. With technology, you can add an alert onto the indicator. So when price crosses above it or below it, you get a text message or an email or whatever. You don't necessarily have to sit in front of the chart, but you're waiting for a reaction before you can get into a trade. Now, if you are getting into a fight or some type of wrestling match or soldiers on the battlefield, if they're waiting for their opponent or the enemy to strike first and then you're reacting, and only then are you reacting to what they did first, you're put at a disadvantage. Okay. Well, we believe the same thing to be true in the markets. If you are reacting to something, you're at a disadvantage. If you don't have a way of anticipating where price is going to go, then you're at an disadvantage. You're just waiting around for something to happen to react to it and just hoping that you're on the right side of things. Okay. Now, when we come down here, same concept. We're looking for, this is our RSI. So we're waiting for this line to get above this line. This line is considered overbought, okay, which there's not a such thing. And then this line down here is considered oversold. And so we're waiting for price to get below it and then cross back above it before we can react and get into a trade. We're looking for price to cross above it here and then cross back below before we can react and get into a trade. So, same concept here as up here. We're waiting for something to cross over something else, and then we're reacting to that. And only then are we getting into a trade. Um, and then down here, same thing as the RSI. This is your stochastic. Only difference is we now have two lines. The black line is considered the K line, and then the white line is considered the D line. And you're waiting for the K, which is the faster moving average on this chart, pretty much, to cross below the slower moving average on this chart down here. So, same concept. We're waiting for one thing to cross over another, and then we're reacting. We're reacting, which pretty much means we're going to be late. Now, we're talking about an industry that on a daily basis, you see trillions of dollars trading from accounts to other accounts. Okay. Now, if it was this easy to do it, there would be a whole lot more millionaires in the world. Just as simple as that. You would have a whole lot more successful traders out there. Now, a lot of people who've gotten into Forex believe that it's a scam because they're taught this stuff and it's so easy to fall into the trap. I mean, like that's what lured me into this industry was the easiness of how this is supposed to work. But one, I wasn't successful at the rate that I wanted to be. Um, and the reason for that, I would win and then I'd give it right back when price got choppy, which it does on a regular basis. And so you win some and then you give it right back to the market. Okay. So you wasn't really progressing, even if you can say that you wasn't losing. That was me. Okay. But the easiness of it is what really lured me in. It's like, okay, all I got to do is wait for something to cross over something and I'm going to make a lot of money. That's what got me in there. But it just didn't make sense. And I knew there was people out there that were being successful and that's what kind of bothered me was the fact that I wasn't being successful and there was a lot of people that was. Um, eh, but what were they doing that was different for me? And it took a while for me to come across the right information. That's what I'm trying to provide here. That's what we're doing at Seven Kings Trading is we're providing the proper way to trade the markets, which is you have to learn how to read them first. Okay? So, once you graduate from indicators, you then go into advanced trading, okay? Well, real quick actually before we step away, I just do you think something with that much money? Again, this whole video is for you to be the judge. Okay, do you think something with that much money associated with it on a daily basis is going to be this easy to master? All you have to do is wait for this to cross over this and get in. And do you really believe that something that is dealing with that type of money would be that easy? They wouldn't allow it to be, and they don't. Okay, so anyway, let's get rid of the indicators. Uh, Clean up the chart a little bit before we mess it up some more. And then I'm going to put the drawings on here. Okay, now ignore these dotted lines for the time being. I'll touch on those here in a moment. But right now, I just want to focus on this thick gray line, and then these three green lines. Okay. Um, Once you advance from indicators, then you get into what they like to call price action trading. Okay, price action trading. What does that consist of? Well, it consists of learning a whole lot of candlestick patterns, right? So, like, this is supposed to be a sign that it's a reversal. That's a hammer right there. I, again, not something that I'm very versed at, because it it really doesn't work. I mean, like, you can have price come down and then immediately get an engulfing candle in the opposite direction. Well, that means the same thing as this exhaustion candle right here. And so if you have two completely different type of candles that mean the same thing, I just never understood the logic there. But the other part of it is these lines, okay? More lines, okay? When you get into trading, just until you find the right stuff, just get used to a lot of lines, okay? Whether they're squiggly lines or straight lines, it's a lot of lines, and you're waiting for something to cross over these lines to violate the lines, okay? Well, with the trend lines, the concept is you got a trend, price started here, touched it here a second time, and now you have a trend. Well, at this point, you're waiting for price, waiting, reacting to price, and you're wanting it to cross over this line here. Once it crosses over, then you're looking to buy. Okay. And then you have similar concept here. Price is coming up. You started here. You have a second touch here. Now the trend line starts. A third, fourth, fifth. This is a very strong trend line here. So once price breaks below, you sell. Okay. And then some say when it breaks above and then comes back and test it, retest, then you buy. Or if it breaks below, comes back and retests, then you sell. Okay. So again, we're waiting for something to cross over something else, and then we're actually reacting to it and acting on it. Okay. Again, you're reacting, you're late. You know, that's simple concept as far as I'm concerned. You can have your own opinion. That's why I'm making this video, so that you can. I'm just putting it out there. Now, I trust trend lines more than I trust these support and resistance lines. Why? Because I really believe support and resistance is very random, and ultimately, I mean, it's a setup if anything. But the way these work is you have price touching these levels multiple times. So it touched here, touched again here, touched again there. Okay, right here you have price coming up, bouncing off of it. Um, Resistance turns into support over here, and then but again it's subjective because and then you have a lot of support over here, resistance here, but there's a lot of different levels that you can put these lines on, so that now we're talking subjectivity. What you see may not be the same thing as what somebody else sees, and so they have support and resistance lines here, you have them here, someone else has them another place. Okay, so it's very subjective. On top of that, I it's random. So I just like to, this is a little thing I like to do where I'm going to go to a 15-minute chart. I'm going to get rid of price. Bang. I'm going to just, well, let's scroll this way. Let's go sideways. And then let's go here. So we just have a random spot, right? You just saw me do it. Then we're going to put a line in the middle of the screen. We're going to bring price back. We're going to zoom out. And then we're going to go to a 3-hour chart. Okay. And we're going to look at this line. Already, we almost touched it to the pip there. What else? Let's go daily just so we can see it a little better. Okay, so random line, right? Price almost touches it to the pip there. Bang, bangs off of it there, bangs off of it there, bangs off of it there. You had support here. Um, I mean, as you can see, it's random. We put it randomly on the chart, and price is interacting with it. So, I mean, how valid is that? You see what I'm saying? So it's not valid. So let's go back to the price section we was looking at. And so that's your support and resistance lines, okay? But once again, what we're waiting for is for it to either bounce off of it, get a second touch, and that's where we're going to sell, or we're looking for price to cross it, come back and test it, and then we're going to buy. These are basic strategies from it. But again, we're waiting for it to do this and do that, and we don't know where it's going to happen. All we know is once we see it, we're supposed to react to it, okay? So let's get rid of these now. And then we're going to show you the difference between reactionary trading and forecasting price, okay? Which is what we do at Seven Kings Trading, which is what we're teaching our community to do at Seven Kings Trading, okay? So now we're going to deal with these dotted lines, okay? So, what we're looking for, and we're not going to go in too much depth as far as the concept, but just basically, we're looking for levels where price moved away strongly. Okay. So, as you can see, we got a big move here and it continued up. Okay. We have a big move down. We have another big move down. So, we're just looking for areas like this. Okay. And we have tricks and stuff like that to teach you how to really find these areas real easily. But let's go ahead and mark these levels off, and then we're going to see how price comes back to them. Okay. Now, what we would be doing is we'd be looking at price. Once it did this, we would already have this area marked off. Okay, so we're marking this off probably sometime around here after we've confirmed that it was a big move away. Okay, and so what's that? August 17th is when we would go ahead and put a line here, and that tells us when price gets back here, we're trading off that level. Okay, we're predicting that price is going to react off of this level right here. Okay, you can't do that with an indicator, you can't do that with a trend line, you can't do that with a support and resistance line. You can, I mean, good luck with that because there's no basis behind it other than we have a trend. And so when the price hits it, it's going to bounce off of it or it's going to cross through it. Which one is it going to do though? You don't know. You're waiting to react. We're saying when price gets back down here, it's going to stop and go up. Okay? We're saying when price gets to this level, that it's going to stop and go down. Okay? Same thing here. Got a big move away from price. So when price gets back up here, it's going to, already did it there, but we expect it to do it again. And nothing is 100%. Let's just put that out there. But your odds are a lot greater when you speak the language of the environment you're in. Okay. And so we come across our first interaction. Price comes down and turned and went up. Came back down into the area more, turned and went up. Okay. We have another level here where price moved away strongly. So we're going to go ahead and, because this is where it happened at. So we're going to put that there. Now we have this area here that we already knew price was going to get and then go down. Now in this case, it shot through it. And depending on where you put your stop loss, you may have lost that. Me personally, that's probably a loss for me because I'm very, very accurate with my entries. And my stop losses are pretty tight because of the fact that I feel confident about reading the charts. And so this probably would have been a loss for me. It happens. That's fine. So price comes back down to this level here. Doesn't quite get to it. Shoots away. So we either missed it, and that happens sometimes too, or we just didn't get there yet. And then we go up and we have a big push down here. So we have another level here that we're looking at. Okay, as you can see, price comes down, touches one of our levels, and goes up. That level that it came close to but never got down to came down, wicked up, very strong push up. Okay, we have another level here. Pushed up strong there, and when it pushed up strong, it hit one of our levels that we already had and shot down. When it shot down, it came back down to this level and gave us a move away. We had this level here, this big push down, and when price came back up, it shot down. So didn't quite get there though. So you would have barely missed out if you trade the way I trade. You would have alert over here. Once it got into that area, you would go ahead and put your trade in. And yeah, we teach you how to do all that. We teach you how to do it with your um, risk to reward already mapped out. And so, yeah, we teach you how to do it all in the Seven Kings trading course, in our forecasting course. But basically, as you can see, you have two completely different approaches to doing the same thing. We believe our approach is a lot better because we have a better understanding of what price wants to do. Okay. And so you could kind of pause this video and just study the levels and see how price interacts with these levels. Okay. And again, we're showing you these levels way before it ever happens. Okay. And so you tell me, you be the judge. Would you rather invest your money into something? And I'm just talking about not trading courses or anything like that, not joining trading communities. I'm talking about the way you trade the market is an investment. Would you rather invest your money in something that consists of this line crossing over that line with no real idea of what's going to happen? You're just reacting? Or would you invest your money into something that you say, okay, I see this happen here based on how the language works, that's telling me that once we get back to this level, we're going to get a reaction. And then the beauty of it is it works on all uh, like time charts. And so you don't have to worry about, okay, yeah, well, a month later, you got a trading opportunity. Well, one, you have a lot of pairs, and it happens on every pair, it happens in every market, but also it happens on every time frame. So, me personally, what I do is I look at the 3 hour chart, the 1 hour chart, I find my levels, and then I start to go down as low as the 3 minute chart. Okay. But because I trade multiple pairs every day, there's always an opportunity out there. And so you don't have to have FOMO, which is, for those who aren't aware, the fear of missing out, because there's constantly going to be a opportunity in the market. Okay. And really all you need is 3% or so every day, every other day, and you're going to average a good percentage a month. I mean, if you take 5 trades a week and you win 3 of them, lose 2 of them, you're going to be up something like 7% in your account if you trade the way we teach you how to trade here, because we do 3 to 1s at minimum. Okay, so at minimum, you're looking at a 7% week. And I mean, you're 28% in a month. You do the math. So we just want you to be able to understand the charts. I just wanted to give you an example of our approach compared to 90% of the approaches out there that you're going to learn from. They're either going to be teaching you how to deal with indicators, their own personal indicator that they basically just designed from another indicator, or they took 3 or 4 indicators and put them together somehow and came up with something that they threw a title on and called it their own. Or you're going to see uh, trend lines, flag patterns, and ciphers and crab patterns, and yeah, all of this crazy stuff that really the market cares nothing about. This is just a way for people who don't know what they're doing to have some kind of understanding of what the market is doing. When you learn how to speak the language, you don't have to take that approach. So you be the judge. You tell me if you think trading indicators and trend lines and stuff like that is more conducive to success than speaking the language and having an idea ahead of time of what's going to happen. We'll go ahead and finish up the video on that note. If you're interested, come check us out at sevenkingstrading.com. And yeah, you can get one-on-one service from me. We have a community if you want to join that, where basically I do live webinars every week. I put out live trades. Again, I'm putting these levels out before it ever happens. And so you don't have to worry about getting a notification too late after the trade happened and you never get an opportunity to get in. Um, you can talk to me one on one, like I said, in Zoom meetings. Uh, and we also have our course where we go through step by step comprehensively showing you how to read the market, showing you little tips and tricks on how to, cut that curve and learning curve in half and really, do it the right way. Anything that's worth doing is worth doing it the right way. Anything with this kind of money involved, you're not going to be successful just throwing some lines on a chart and reacting to it. So come join us. At minimum, go to my YouTube channel and check it out, Seven Kings Trading, and see what we're doing over there. And yeah, you have a wonderful day and thank you for your time. Seven Kings Trading. My name is Terrell, and I'm out.